The Australian share market closed with a sharp gain on Wednesday, after a volatile trading session in New York following news the US and UK would ban Russian oil and energy imports. Key points: the ASX 200 closed higher on broad gains. The ASX 200 closed higher on broad gains. Oil prices jumped about 7% on news the US and UK would ban Russian oil imports. Oil prices jumped about 7% on news the US and UK would ban Russian oil imports. Wall Street ended lower after a volatile trading session. The United States announced it would ban all imports of oil, gas and coal, while the United Kingdom said it would ban oil, and the European Union plans to slash gas imports. Russia accounted for about 8% of all US petroleum exports in 2021. US President Joe Biden warned that Americans would see a rise in petrol prices due to the ban, saying defending freedom is going to cost. Oil prices jumped 7% on the news, before trading off the highs. The US benchmark oil West Texas Intermediate crude oil was last up 1.9% to $126.10 US. The global benchmark Brent crude oil soared 7.7% and was last at $131.308 US, up 2.5%. Analysts from JP Morgan now think Brent could hit $185 US by the end of this year, while Goldman now sees Brent at $135 US. Asia-Pacific OANDA senior market analyst Jeffrey Halley said there was plenty of doom and gloom about oil prices. We can ignore Russia's $300 US a barrel prediction because we can't believe anything Russia says. As for all the $200 a barrel prediction, that would certainly cause a recession around the world, but I harbor doubts we will see those levels, he said. However, Mr. Halley said countries would be hitting the phones to find new suppliers in places like Caracas, Riyadh and Tehran, Malaysia and Indonesia. Still, a switch can't magically be switched on to increase production around the world. That will take time, he said. I don't rule out $150 plus Brent crude, but unless Russia ups the stakes, or the West decides to go no-fly zone over Ukraine, I am not having $200 nightmares at night. Loading. ASX up. Analysts say the dominance of local commodity exporters means Australia is better placed than most to withstand the turbulence of further sanctions against Russia. The benchmark ASX 200 index closed 1% higher to 7,053, while the broader All Ordinaries added 1.1% to 7,331. The gains were felt across all sectors, with tech, telecommunications, consumer discretionary, and bank stocks leading the charge. The top stock was Mesoblast Limited, up 17%. Paladin Energy gained 11%, Gold Road Resources added 8%, Novonix Limited rose 7.8% and Allkem Limited lifted 7.6%. After plummeting earlier in the trading session, Nickel Mines pared its losses to close at 4.4%, Altium Limited fell 3%, Boral dropped 2.8%, ResMed Inc slipped 2.3% and was down 1.9%. AMP Capital chief economist Shane Oliver said a new commodity supercycle, which included the surge in oil and energy prices, should be positive for the relative performance of Australian shares. It's early days, but so far Australian shares have held up better than global markets, he said. Since their bull market highs, Australian shares are down 8%, US and global shares are down 13% and Eurozone shares have fallen 20%. A big part of the reason is the relative strength of resources stocks. Consumer confidence down. New data shows the war in Ukraine is weighing on consumers, with confidence down by February 4% in March, according to Westpac, a Melbourne Institute's monthly survey. Consumer confidence is now negative for the first time since the start of the COVID-19 pandemic, AMP Investments senior economist Diana Musina said. Ms. Musina said the monthly data showed consumers were getting nervous about economic conditions in the short term and long term. Confidence around family finances has also fallen, but not to the same extent as economic conditions, she said. While COVID-19 is now less of a concern for consumers, bad news around higher inflation, impending interest rate rises, rising petrol prices, flooding in Australia, and the war in Ukraine would all weigh on consumers. Rocky day on Wall Street. On Wall Street, the Dow Jones Industrial Average lost 0.5% to 32,632. The S&P 500 was down 0.7% to 4,170, while the Nasdaq Composite fell 0.3% to 12,795. The energy sector gained 1.6%. Chevron shares rose 5.2%. Overnight, the price of nickel doubled to hit around $100,000 a ton before the London Metals Exchange suspended its trading. When trading was halted, the price came down to $80,000 a ton, up 66% on the day, and a staggering 177% since Monday. The current events are unprecedented, the LME said in a notice to members. The suspension of the nickel market has created a number of issues for market participants which need to be addressed. Buyers are scrambling for the metal, which is crucial for making stainless steel and electric vehicle batteries. The concerns around supply are driving down the price of company stocks. Traders said some position holders had also been struggling to pay margin calls. China's Tsingshan Holding Group, one of the world's top nickel and stainless steel producers, had been building a short position in nickel since last year, betting prices would fall, according to. Iron ore was down 0.3% to $162.25 per ton. The Australian dollar was up 0.2% and worth 72.80 US cents. The Pan-European Stoxx 600 index lost 0.5%, Germany's DAX and Britain's FTSE were flat. ABC